Welcome to XM.com for today's Daily Market Comment by Mario Chatagiriakos. I'm Christina Marujos. Global markets will have their gaze locked on the Federal Reserve today, which concludes its meeting at 6 o'clock GMT. The Fed is unlikely to begin a discussion about exiting asset purchases at this meeting. Chairman Powell might indicate this conversation is moving closer, but hasn't started yet, preparing the market for a proper shift in the autumn. Beyond that, investors will focus on the new dot plot where the first rate hike might be brought forward to 2023 as the economy has exceeded expectations. That would normally argue for a stronger dollar, but any reaction may be minor as markets have already priced in 2 rate hikes for 2023. Overall, there is no reason for the Fed to rock the boat right now. Inflation expectations and yields are stable or declining, and markets expect taper talks to begin in late August. Therefore, any real dollar strength might have to wait until then. Wall Street encountered an air pocket yesterday, surrendering the gains from earlier in the week as the tech and growth sectors came back under fire. The catalyst was the U.S. retail sales report for May, which missed expectations. The minor retreat in equities might also reflect some hedging by investors wary of a hawkish surprise by the Fed today. The main risk for stock markets this year remains the ultimate withdrawal of cheap money from the financial system, but even that might prove to be a mere flesh wound. After all, there is no alternative. Bonds are a dead asset class, commodity markets are too small, and crypto is even smaller and riskier. Speaking of commodities, crude has gone on an absolute rampage lately. Oil prices stormed to new highs yesterday after the private API report showed a huge drawdown in U.S. inventories, fueling hopes that stored supply is being absorbed quickly as demand returns with force. Another piece of this puzzle is the U.S.-Iran saga. Iranian elections are scheduled on Friday, and a deal is still possible, but perhaps not immediately, adding momentum to oil prices. The Canadian dollar has been unable to capitalize on this, however. Nothing has fundamentally changed, so it appears that a lot of optimism was already baked into the Loonie, which is the best performing major currency this year. The nation's inflation data for May will be in focus today. This was the Daily Market Comment here at XM.com.